I'm going to share with you today the top 2 stocks that I invest in that pay high paying dividends. I'm going to cover the dividend rate, important statistics, and why I love them the most. If you stay to the end, I'll also cover the most popular mutual fund in the world. I'm not an advisor, I'm not an investment advisor, so this is just some information I'm sharing with you guys. Dividend income is also considered passive income, meaning once you buy it, you don't have to put a finger on it and you will make money. If you bought real estate and you put a tenant in there, after that point, you don't do anything and you just make money. That's what dividend stocks are. Now, some companies, they don't pay a dividend because they choose to reinvest their money in the company. Maybe the profits are low or the company's losing money. The 2 main advantages why I love dividend reinvestment plan, they call it a DRIP, is because of the compound growth. So instead of receiving cash dividends, which may be subject to taxes and fees, let's say, the DRIP reinvests the dividends right back into the investment. So you actually purchase more of the shares. The second thing is that you can also avoid commissions, fees, and taxes, because technically you're not selling it. You get the DRIP, you get the dividend, and then the dividend just purchases more stock for you. I hear a lot about stocks like PG&E, and they have a 2.5% dividend, which not good for that kind of money. Coca-Cola, we all know that Warren Buffett drinks a soda every day, 3.14% dividend. I don't think that's very good. Johnson & Johnson, they're paying 3.39% dividend. For $146, I would think they would be able to give back more. Apple pays a super low 0.5% dividend. Not good. I mean, it's at around almost $200. And then you have Google, which, believe it or not, for $166 or whatever they're charging, $171.95, they don't even have a dividend, which I don't understand. So those stocks are great. They're phenomenal companies, but their dividends aren't. So based off inflation, you might not even break even. So why would you invest in a stock that doesn't even have a dividend or a good dividend? Now, if you're a day trader, I'm not talking to you. You guys are doing different things. My first stock we're going to cover is Altria, ticker symbol MO, and it pays a whopping 9% dividend. If you haven't heard of Altria, then maybe you've heard of Philip Morris. So Altria basically owns Philip Morris from a spinoff. Altria covers basically all your cigarette and tobacco products. So if you've ever heard of cigarettes like Marlboro, Parliament, Virginia Slims, Basic, they also sell smokeless products, Copenhagen, Skull, and they also invest in cannabis as far as their Cronus group goes. Now, Altria is international, whereas Philip Morris, which if you have heard of, they're just for America. One reason why I love Altria, they've been around for a super long time. If you've ever listened to Dave Ramsey, he says anything over 10 years is a good track record for being on the stock market. These guys have been on the stock market since 1984, so that's excellent. The dividend is just over 9% annual. So basically, if you were to put $10,000 into this at this point, at the end of the year, you would have $10,900. So, or let's say that you put in $100,000. At the end of the year, you would have $109,000. What if you put in $1 million? At the end of the year, you would have $1,090,000. This is what I call a high-paying dividend stock, and it's a defensive stock. So it doesn't matter if the economy is doing really good or really bad. People are going to smoke. They're going to dip. They're going to smoke. They're going to whatever. You can't stop that. Whether they're addicted or not, I'm not getting all that. All I know is that this thing pays a lot of money, and that's why I love it. My second favorite stock is Ares Capital Corporation, ticker ARCC. They've been on the market since 2004, so that's 20 years. That's great. They're a business development company. They work in areas as far as manufacturing, technology, energy, healthcare, consumer products. They're international, they're worldwide. They basically just help companies grow is what they do. They've loaned anywhere from 20 to 40 million up to around 4 to 500 million. So anywhere from a small to maybe a mid-sized type company. They pay a whopping dividend of 9.24%, again, over 9%. These 2 stocks pay over a 9% dividend, and they have been doing this for years, and I don't see it stopping anytime soon. I mentioned earlier a bonus, so if you're looking to mirror the market and you just want to do what the market does, then you can invest in VT Sachs. VT Sachs has paid between 7 and 8% since their inception, and they've been around for a while. They were created in 1992 from Vanguard. It stands for Vanguard Total Stock Market Index Fund. So since its inception, they've delivered around 7 to 8% on their return. VT Sachs represents the entire market. So you're talking 3,788 stocks. So if you're looking for stability and you're wanting to be secure and things like that, you don't want to get anything volatile, this is a good one, VT Sachs. And also their expense ratio is very low, 0.04%. Meaning if you have $100,000 invested in this, your fees are only $40. There's a lot of other stocks out there that their fees are around 1%, 2%, I've even seen 3%. 0.04% is extremely low. A few guidelines real quick before you leave. Spend less than you're making, invest the surplus, and avoid debt. So if you're interested in starting real estate investing, then check out this video right here.